When I first started out investing, I often wondered how these news headlines can be so dramatic day after day. There never seems to be a shortage of things to talk about in investing, finance, cryptocurrency, world economics, real estate. It just doesn't end. And it always goes from one extreme to the other extreme. There doesn't seem to be a middle ground. If it's not pumping, if the markets aren't skyrocketing and everyone's getting rich, then everyone's getting poor. There's wars, there's talk of recessions, people losing their jobs. There's just never a middle ground. And sometimes the years don't have massive highs or massive lows, yet we're led to believe that we have to see a mega crash or a mega boom. This just isn't the case when it comes to investing. So in today's video, we're going to look at the fears and the calls for further recessions. But of course, my spin on it is that I don't think we'll see one of those. And this just lends hand in hand with the 18.6 year cycle, which at this point is going perfectly to plan. The 18.6 year cycle has over 200 years of data and looks set to continue, leading us into a new peak somewhere around 2026. So we'll take a broader look, a macro view of the markets, and then dive into the shorter term timeframes and give us a look at where some of the opportunities might lie, in particular with cryptocurrency. If that sounds like it's up your alley, do the right thing and hit like, subscribe, and share the content with a friend. First things first, check out the links in the top of the description to Patreon if you want to accelerate your investment journeys. Join us there with our other members and weekly group calls, and you'll also get access to the spreadsheets that I use here on the channel. The news headlines are flipping heavily towards the whole recession narrative. There's going to be two parties yet again because the polarity sells. We're going to have deniers of the recession, perma bulls like myself, and then we're going to have the doomsdayers, the ones who are calling for a massive recession. And I don't think there's going to be either of those. I don't see a perma bull happening this year, and I don't see a major recession happening this year either. Oil prices, of course, they've spiked. And as always, I see massive opportunity in Bitcoin and cryptocurrency. Of course, I'm biased towards Bitcoin and cryptocurrencies, but these have been the best performing assets over the last 5 to 10 years. And I don't expect that to slow down anytime soon, especially with the second stage of the real estate cycle taking full swing in the coming months. What does that look like? Well, it's the 18.6 year cycle. We're somewhere in the middle here, coming out of these lows, and this year's again going to be volatile. So I'm looking towards the next 3, 4, 5, 6 years to be pretty prosperous times for everyone, especially those that are invested in real estate and the stock market, and of course some cryptocurrencies. A lot of these things are going to die out, which we are already currently seeing, some of the big names as well. But the blue chips will potentially be there, and we'll continue to follow that on the chart in case I am wrong and the markets break down from their major support structures. But this is what we're looking at moving forward as a macro picture. Now to the news headlines, and we're seeing a lot thrown around about recession and oil. Oil hitting $130 a barrel. Oil going to $200 a barrel. It sounds so similar to what happened with Bitcoin in 2021. As Bitcoin hits $50,000, the next thing is $100,000. As it hits $60,000, the next call is $200,000. The same thing happens time and time again because the news is what they want us to hear, not what is actually going on. As for a recession, it is 2 consecutive quarters of negative growth in real GDP. Looking at the US figures here, real GDP, percentage change from preceding quarter, they've had six quarters of positive growth. Quarter 3 of 2020, quarter 4, and then all of 2021 was also positive growth. Now, could we get 2 consecutive quarters of negative growth? Of course, we can obviously see that. But at the end of the day, we're expecting 2022 to be somewhat of a volatile sideways year, trading between 2 big ranges. And this is just going to create opportunities. So regardless of the fears getting thrown out about recessions, I think we're going to come out of this with some of the best opportunities that we'll see in the 2020s. Now, of course, I'm referring to the US markets here. Just as a quick example, the UK stock market, the FTSE 100, is at its same price as it was 22 years ago. So it has had some minor uptrends in the last 20 years, but they've been smacked down every single time. So although I'm speaking broadly about the world economy here, there are places which are not faring as good as the US economy. And if you factor in inflation, then this price is obviously a lot lower than it currently is. As for the oil headlines, traders are now betting on $200 oil. Oil price shoots to $130. This stuff gets the clicks. What's actually going on? Oil looks like a price chart of Doge when Elon Musk tweets, it just has gone straight up in the last few months, straight up into $130. Does that mean it's the top? Of course, I don't know, but it is beginning to look a little suspicious that we're getting towards the end of at least a short-term peak. Now, I'm not saying this is the top, but when you see a market go straight from $90 to $130, probably means that there is some sort of profit taking that needs to come into the market. As for Bitcoin on macro, not much has changed in the last few days. The price remains around 37 to 38,000. In terms of a safe level, I'm looking for $40,000. We need to get above $40,000, get a close, get a few closes and some consolidation so that we can confirm a higher low and then attempt to go back towards 46K. The longer we wait around in these high $30,000 areas, the more likely it is that we'll come back to test at least 36 and probably some of these lows at 33 and 34,000. So we want to see it back above 40,000 sooner rather than later for the short-term bullish picture. And from that point to build into a medium to long-term picture. Now, looking at opportunity for Bitcoin, if this doesn't happen, then of course we'll get lower prices and we'll come back and test somewhere around the high 20s. Maybe we'll see a spike into the mid 20s, but that's a little way off at this point, so I don't want to get too far ahead of myself. But the opportunity comes while the markets are fearful, they're unsure of what's coming next, and people tend to wait until it's too late before they get into markets. So make sure you stay with the markets, keep your alerts on, and keep an eye on the price of Bitcoin and, more importantly, the chart. Now for the massive opportunities in cryptocurrency. We've seen some big news overnight with Andre, who is the founder of Yearn Finance, calling it quits. They're calling it quits along with Anton Nell. And this also goes to the project Keeper, so Keeper Network. And what has this done to the price? Well, for YFI, which is the token on Yearn Finance, this was the tweet. It dumped the price from 20,300 to a low of 17,300, but it's since recovered. It hasn't broken the bottom on the 24th of February. So if this can start to grind around and work its way higher again, not looking like a bad low. As for the other crypto, KP3R, it sold off very heavily from the time of that tweet. So this was at 7 p.m. on the 6th of March, my time, of course, so 7:38 p.m., 6th of March, tweets out, KP3R dumps. It looks like it's trying to form some sort of base short term to bounce from, but longer term, I still see some more support further down at about $260. And if that can't hold, then we're looking further towards about $70. So the big opportunity I'm seeing here is a lot of this bad news is coming out while the market is down already. So it's basically just smacking the market while it's down. If we can see some support, some consolidation, then these DeFi projects are looking pretty sweet long term. The consolidation will have to include a low and a higher low forming before we start to take out some of the previous highs and form higher lows and higher highs, giving us an uptrend. So that's what I want to see moving forward. Keeper will stay on my watch list, and I'm not looking to buy the dip every time this thing dips. You can see that we've had multiple weeks down without any sort of relief rally that is significant to the price. It's dumped all the way from about $2,000, currently sitting at $360. Of course, if this thing breaks right down, then it's into new all-time low territory, and there's just no saying where this thing will end up. So that's why I like to wait for these cryptocurrencies to build up and show me when they are ready to break out of their accumulation. Convex is another DeFi cryptocurrency that's had a massive tank on price. They found a bug causing the CVX token to sink on forced token unlock. So basically the market was flooded with CVX tokens. There wasn't a hack on CVX and tokens being stolen before they were dumped onto the market. Essentially, it was just locked CVX tokens flooding the market, and that was able to drag the price down. What we saw was a pretty significant drop. You can see the market went down 12% on the 4th, and it's continued to fall since that point. Now, I don't see a low getting formed here just yet, but at least the market is starting to slow on that bleed down. I am looking to lower price at about $8, which is the previous support in September. And if I use more historical data, you can see the price was all the way back at $2 back in July of 2021. So I'm not ruling out any of these figures, even though it's a long way from the current price of $15, because at the end of the day, the market is down. There is no sign yet of a bottom forming, and we're seeing a lot of volume come in at the tops, which generally looks like the smart money selling off into the dumb money. It is unfortunate that bad times bring good opportunities in the market. This is just something that we have to separate as investors with our investment business and our emotional selves, our personal daily lives. If we can do these two successfully, then probably going to be quite successful in investing. The fear and the uncertainty is thrown at us by news outlets to drive a narrative that they want us to hear. They are a business and they want to make money. So I like to flip that on its head and just say, take your fear, take your emotions. I am here to look after myself and my family, and I hope you guys do the same as well. With that in mind, I thank you for your time and ask if you could kindly hit the like, subscribe, and share the content with a friend if you found some value from it. The links are in the top of the description for Patreon. I'll see you guys at the next video. Until then, have more fun to get more done.